Most people fail financially not because they lack income, but because their money management system forces them to make hundreds of agonizing decisions every single month. If you are still running all of your income, bills, savings, and guilt-free spending through a single checking account, you are operating on a financial architecture designed for stress and eventual burnout. Self-made millionaires do not rely on willpower or manual calculations to build wealth. They build automated bank account systems that make saving, investing, and tax prep completely friction-free. By the end of this breakdown, you will have the exact 4-bucket framework used by top earners to eliminate decision fatigue and guarantee automatic wealth accumulation. But before we unveil the crucial 4th bucket that turns ordinary savers into multimillionaires, we have to expose the single fatal flaw lurking in your primary checking account right now. The fundamental mistake most people make is treating their primary checking account as a catch-all bucket for every dollar that comes into their life. When all your money sits in one pool, your brain falls victim to an optical illusion called artificial liquidity, making you feel richer than you actually are. You look at a $5,000 checking balance on Friday and mentally approve a lavish weekend dinner, completely forgetting that rent, insurance, and annual subscriptions are due next week. Millionaires solve this cognitive overload by immediately dividing their capital into 4 distinct, non-negotiable accounts upon arrival. The first layer of this architecture is what we call the command center checking account, which operates strictly as a central traffic hub rather than a final destination. Every dollar of income, whether from your salary, freelance client payments, or dividends, must land directly into this single primary account. However, no direct lifestyle spending, discretionary shopping, or daily coffee purchases are ever allowed to happen from the command center. Instead, on the 1st and 15th of every month, your command center automatically executes scheduled transfers out to your remaining 3 financial buckets. For example, if you earn $6,000 a month after tax, the command center keeps only the exact amount required for fixed, non-discretionary living expenses like rent, utilities, and debt payments, plus a 5% buffer. If your fixed expenses total $3,000, you leave $3,150 in the command center and immediately route the remaining $2,850 elsewhere before you even have time to consider spending it. This simple automation layer instantly reduces your monthly financial decisions from dozens down to 0. Now, where does that remaining $2,850 go, and why do most people get the second bucket horribly wrong? That brings us to bucket number 2, the Fortress Vault, historically known as your emergency fund, but restructured for extreme psychological security. Standard advice tells you to keep 3 to 6 months of living expenses in a standard savings account at the same bank where you hold your checking account. This is a massive tactical error, because keeping your emergency reserve under the same digital roof as your debit card makes impulse withdrawals far too easy. A true millionaire architecture places the Fortress Vault in a completely separate, high-yield savings account at an entirely different, high-security institution. By separating these banks, you create a healthy friction delay. Transferring money back to your primary checking takes 24 to 48 hours, which effectively kills impulse spending while keeping capital safe. Furthermore, by utilizing a high-yield account earning 4% to 5% interest, rather than a traditional bank's 0.01%, a $30,000 Fortress Vault passively generates over $1,200 a year without any additional effort on your part. Once your Fortress Vault reaches its target balance, every future dollar that would have gone into emergency savings gets redirected toward true wealth accelerators. But before you route a single dollar toward investments, there is a third, silent bucket that protects freelancers, side hustlers, and high earners from sudden financial ruin. That critical third layer is the tax and irregular expense reserve, designed to handle non-monthly, predictably unexpected financial hits. Most people suffer severe financial panic when annual auto insurance, property taxes, holiday gifts, or quarterly tax estimates come due, because they treat them as surprise emergencies. Millionaires recognize that a $1,200 annual car insurance bill is not an emergency. It is simply a predictable monthly expense of $100 that arrives once a year. To execute this, calculate all your annual non-monthly obligations, divide the total sum by 12, and set up an automated transfer from your command center into your tax and irregular reserve every single month. For instance, if your annual property taxes are $3,600, your annual insurance is $1,200, and your holiday budget is $1,200, your total annual irregular load is $6,000. By automatically moving $500 per month into this third bucket, those terrifying multi-thousand-dollar bills are paid effortlessly without ever touching your daily lifestyle or investment funds. If you are self-employed or have side income, you also reserve a dedicated sub-account within this bucket where 25% to 30% of every incoming client payment is segregated immediately for tax payments. By isolating your tax liability from day one, you completely eliminate the dread of tax season and ensure you never accidentally spend money that belongs to the government. Up to this point, we have secured your operational cash flow, shielded your emergency reserves, and neutralized surprise liabilities. But how do you actually build passive freedom without constantly micromanaging your investments or feeling guilty about buying a $7 latte? This is where bucket number 4 comes in, the automated engine of wealth, which is split into 2 distinct sub-accounts, wealth building and guilt-free lifestyle. The wealth building sub-account feeds your brokerage accounts, Roth IRAs, 401ks, and real estate funds automatically on fixed dates each month. The psychological trick used by wealthy individuals is to treat their investment transfers as an unyielding, non-negotiable bill that gets paid before anything else. For example, if your goal is to invest $1,500 every month, that money leaves your command center on the 2nd of the month, right after payday, long before you can spend it on restaurants or retail. Whatever money remains in your system after funding fixed expenses, emergency reserves, tax obligations, and investments gets transferred directly into your guilt-free lifestyle account. This second sub-account is tied to a standalone debit card or dedicated spending credit card that represents your absolute limit for discretionary enjoyment. If your guilt-free lifestyle account receives $800 at the start of the month, you are free to spend that $800 on dining, travel, hobbies, or luxury goods with zero guilt, knowing that all your wealth and responsibility metrics are already 100% fulfilled. If that account hits zero on the 20th of the month, your discretionary spending stops until the next transfer cycle, protecting your long-term wealth without requiring detailed daily budgeting spreadsheets. By structuring your accounts into these precise buckets, you transform money management from an exhausting daily effort into an automated background program that runs flawlessly while you sleep. Mastering this banking architecture is the single most effective way to eliminate financial friction, master your psychology, and scale your personal net worth systematically over the coming years. Start by opening these dedicated accounts today, set up your automated routing rules, and watch your decision fatigue disappear as your financial growth becomes completely automatic. If this breakdown brought clarity to your money system, hit the like button and subscribe to the channel so you never miss our deep dive financial frameworks.